I called out a long position on BTC on my channel this week at around 64 to 63k. I said my targets are 70k and then I'll look to short around this region. And I didn't take either of those trades. That cost me over $10,000. And sometimes the hardest part of trading isn't being wrong, it's about pulling the trigger. Hesitation is sometimes much more expensive than a loss. But the most important thing is I did not revenge trade. Now reflecting back on my mindset, I was completely ready to take the positions. However, at the time for the long position at 63 to 64k, I wasn't on the charts. And for the short position, I was looking for perfection. And that resulted in me not taking the trade. Now I'm going to deep dive into exactly the entry that I missed out on and why I was looking for these entries. Now on BTC earlier this week, I called in my channel, I'm looking at the regions of around 63 to 64k. Now we've been in range bound price action. Normally after a huge move to the downside, we expect range bound price action and then we would expect a continuation or a reversal. So given that we're in range bound price action, it's a good time to trade because it's easy to identify where you can take your entries and where you can put your stop losses. Now for me specifically, if we go on the weekly time frame, there's a couple of key things that convinced me that we were going to get a slight reversal to the upside to 70k. So the first thing is we have an order block resting down here. This is actually a monthly order block resting just down here. Price taps into it. Weekly time frame, we reject off this order block and we have a dealing range high and a dealing range low down here. Essentially, we're in the discount side of the dealing range. So we want to be looking for long positions within this territory down here. Now on the daily time frame, we can see a lot of accumulation. Now this accumulation is basically a good sign for us that we're eventually going to start moving in one direction aggressively. And that could be a manipulation to the downside first, then the continuation, or we could get a move to the upside around these regions and then come down one more time before we get the bigger move to the upside. Now, in terms of my position, given that I was looking for a long position to the upside, the first area that I was looking at for BTC to reverse was around the 63 to 64 region. And we've got a fib from these lows to these highs and price taps into the 78.6 key level. Now, 4-hour time frame, what I was looking at as price comes down, this is a textbook setup. Price comes down, we get a pullback, price continues coming down, we get a pullback, and then we get a sweep down here. And that's your textbook setup on the 4-hour. So what we can see on the 1-hour is as we move down, price slowly started to chop sideways. When we were chopping sideways, we knew we were in a key area of reversal. All we were waiting for is a sweep of liquidity. And that's exactly what we got. We got the sweep of liquidity and an aggressive bullish impulse to the upside, also known as a strong displacement. Now, this displacement did result in a break of market structure down here. So this is your first entry sign. You can see price comes up and we do get a pullback. Now this pullback took out some form of liquidity, so you could have taken an entry down here. However, I would have gone for a conservative entry and waited for the next impulse and pullback. So when we got the move to the upside, again, a strong aggressive displacement to the upside, this is where I would have taken my entry. So there's key things that we can see down here is number one, we've got a order block resting down here, but I usually take my entries off the 61.8 retracement and price taps exactly into that key level. So I would have taken an entry from this area, stop loss just below these lows down here, or you can have a wider stop loss below these lows down here. Now I would have put my stop loss below down here. And again, I said to you that I was targeting the 70k region. So go on the 4-hour and what we can see is price taps exactly into the 70k region. And then we continue to reverse to the downside. So that would have been my entry set up for the long position, which unfortunately I didn't take because I wasn't on the chart. Now, the short position is a trade I should have taken, but I didn't. And the reason why I didn't take it is because I was looking for perfection. Now, what I was looking at down here is, although we came into the 70k region, we had liquidity resting above around all these levels. I wanted to see a sweep of liquidity to the upside, at least at 71k, just above these highs down here, a sweep of liquidity at these regions would have convinced me even more and given me a bit more confidence to take a short position to the downside. However, I didn't take the position, but the most important thing is I didn't revenge trade. Now, on the 1 hour, I will go into the exact entry that I would have taken. Now, we had the move to the upside, a very, very nice clean sweep of liquidity. Price comes down, we accumulate down here, sweep of liquidity again, and we get another move to the downside. Break of market structure. This is a clear sign to go short. We can also put in a dealing range from these lows to these highs. We can see number one, price is in the premium side of the dealing range. We want to take shorts. And number two, what we want to see is break of market structure and price come back up into a key area to take a short, which I'll go over in a second. In terms of the targets, what we can see down here is a market maker sell model. So the targets essentially would have been these lows down here, which price hasn't yet come into at around 62K. So we can see here's your buy side of the curve and here's your sell side of the curve. Very, very clean price action as we move down as well. Now, in terms of the entry itself, this is exactly how I would have taken the entry. So after we got the sweep of liquidity, we had the move to the downside. We had accumulation, another sweep of liquidity to the upside, an aggressive move to the downside. So this entry that I would have taken would have been a confirmation entry once again. Unfortunately, I was looking for perfection. Now, as price comes back up, we get the break of market structure to the downside. As price comes back up, we look for key area where we expect price to reverse. And what we can see down here is an order block. So as price comes into that order block, what we want to look for is some other forms of key PDAs. And as you know, I always take entries based on fib levels. So I would put my fib from these highs to these lows. And I expect price to come into at least the 61 to the 78.6 level. Now, you could have just taken your entry based on this setup, and that's normally what I do on the higher time frame. So I would have taken my entry and put my stop loss above these areas down here. If you wanted to be a bit more conservative, you can put your stop loss above these highs down here as well. But this is more of a short-term position to the downside because I am expecting price to continue moving to the upside a bit more for me to take a bigger position to the downside. Now, again, in terms of targets, like I said to you, my targets would have been the lows down here for the market maker sell model completion at 62K. We haven't yet tapped into that level. However, on the way down, I would always take some form of profit. So I would have taken some profit down here. I would have taken some profit down here, and I would have let the rest ride to the end down here. So again, hesitation is sometimes much more expensive than a loss. But the most important thing is not to revenge trade. Put this in your trading journal and move on to the next trade. Now, if you like these types of videos, consider subscribing. I trade crypto and Forex, and I mainly use liquidity to understand market structure. Comment below if you like these types of videos, and I'll make some more for you guys.